but rock and roll. So let's introduce the guests of honor today, who are partners, by the way, in case you guys don't know about Dusten and Omar. Why don't you guys spend a minute each introducing yourselves and your background and development?
All right. My name is Dusten Hendrickson. I am with the group Mailbox Money, and we just create passive investments for myself and others. I started in 2004. First time I started building, and it was actually a duplex for myself that I lived in on one side and rented the other side out. Then slowly that snowballed into what you see behind us. And this is 128 units. I'm at the Blue today doing some walkthroughs. And so over 18, almost 20 years now, I've started, really small, and now I'm here at the top, you'd say.
Rock and roll. Very cool. How about you, Omar?
Look, so Dustin and I are longtime partners. We've acquired a lot of assets acquisitions-wise in the Southeast, Atlanta, Florida, and we're doing a lot of developments now in Sioux Falls, South Dakota, and other markets because there's just a lot of demand for this. And for me, my background's in finance, capital markets, investment banking, all of that. I was running and structuring deals, and now we're doing this for ourselves and making our partners, ourselves, a lot of money in the process. Because look, acquisitions are very lucrative, but developments are also very lucrative, but they're different beasts. So you have to know what you're getting into, and you have to be in with the right partners. Like, for instance, I found with Dusten, right? Because if you're not with the right partners, there's a lot of things that can go awry, and you need specialists. You can't kind of wing it, basically, with development.
What have you seen in terms of how lucrative development is in comparison to other multifamily sub-niches?
Well, look, it depends on the market. I'll take that, Dustin. It depends on the market, right? Now, if you've got a market where there's practically no supply, there's a lot of affluent customer base, they want to pay more money, like in Sioux Falls, yeah, it's very lucrative. But if you're in a market where there's a glut of oversupply, and it's oversupply in the wrong submarket. So let's say you're in a submarket where there's a lot of oversupply, but in other submarkets, there's not a lot of supply. So then it can be a very disastrous thing. But the other bigger deal also is people just look at the dollars, but they don't realize is that it's getting to this. Like there is practically hardly, I think like 99% of the development projects are never on time and never on budget. So the never on budget part, that's typically coming out of the developer's pocket. So yeah, it can be lucrative, but you can also lose your shirt. So you just have to be very careful going in that you have the right partners, right business plan, right market, and then the right set of expertise to execute on it.
Dusten, walk us through the development process in terms of phases. Like, what's the first thing you need to do? How many phases are there? Obviously, you can force appreciation at every step and sell or buy along every step in the process. But from your perspective, for example, in the deal that you're sitting in front of, like, how do you lock down the land, and then what are the next steps? Tell me about that.
Okay, so I don't know if it's because I've been in it for so long and I've done so many creative developments. So I'm creative, and I push the creative envelope, and I've started doing studio units before they're really popular to do. So I've learned a lot of stuff in that regard, and I've stayed ahead of the trends. The first phase is you have to have some sort of vision, but before you really have a vision, you got to find the land. So you need a piece of land, but then you kind of have to have this vision. So it's like an art form, right? So Neil Bawa is right, because it's like an art form to develop. It's not like there's a full process. So you just kind of learn just from doing it, but you first find the land, and then what kind of vision do you have? Like, what can be put on this land? So you can envision something, and then maybe you go to the city and you're like, okay, what can actually be put here? And the city's like, well, we don't want what you have envisioned, and we want this to be there. Well, you've got to conform to their rules too. So, oh, well, maybe that doesn't work anymore. So now you've got to remold your vision to fit their form. And then that's what it is. It's like each step of the way. And the government, when you're dealing with the government, that's by far the hardest, most riskiest, because there's no really dealing with them. There's no way to deal with them. Like you can't, it's not like a blue collar worker where you can hang out with them and you can get them to do things for you very easily. Whereas a government official, it's super, super hard. And you've got to complete all these steps. It's very slow. So you always have to kind of develop with what the city or the government wants, or else you have to influence what the city wants to what you're going to put in there. So there's a lot of politics and massaging egos and all this stuff. And the egos are the biggest at the government level, and they're the smallest at the actual work level. So in my opinion, it's easiest to get the work done. It's hardest to get the vision passed. And so the first steps are the hardest. It's the getting the vision that fits, and then you go through and underwrite it and doesn't work, and then you mold this shape. But there's probably like 5 main processes. And the first one is the land, the second one's the vision, the third one is the zoning, the fourth one is the permitting, and then the last one is the construction, which most everything happens in the last step that you see, but without all these other steps, you can't get to that last step. Well, then there's also the stabilization of the apartment, but that's just kind of the same as when you buy a multifamily. That part's really not that much different.
Okay, so phase 1 is vision and land. Now, tell me about, right?
Phase 1's land. Phase 2 is vision.
Oh, phase 2 is vision. All right, so
phase 3 is zoning. Phase 4 is permitting.
There you go.
Phase 5 is construction.
Excellent. So when you say construction, are you talking about infrastructure or are you talking about actual vertical development?
Both. I mean, so if you wanted to break up the land, it's kind of you'd have to develop the land, then you'd have to develop the vertical construction. But once you get through all the zoning, the rest of the construction's easy. It's just getting people to accept your vision is the very, very difficult. That's the difficult part. And then going through the permitting and making sure that while you're going through permitting, you're not making the building so expensive it doesn't pencil anymore. That's another thing. So every step of the way, you got to make sure it pencils, You're constantly underwriting the whole time you're trying to figure out the deal.
So I'm kind of curious about, as you guys partner, tell us a little bit about what are the ways to partner? Does it make more sense to do joint ventures or syndications? What's your perspective?
Well, that depends what you want to do and who your partner is, right? I mean, if you've got a good partner, the underlying structure of joint venture or syndication doesn't even matter. So in my opinion, the first step is to find the right partner. And Dusten and I worked on a few acquisitions, like $100 million plus in acquisitions before. So we had that trust and relationship built. And then doing a development wasn't necessarily that hard. Or by the way, for any other project wasn't that hard, at least from my perspective. So it's finding the right partner, and the underlying structure, I think, doesn't really matter.
Okay, cool. What about this? Like, how do you decide if you want to, because I know that you're very artistic and you love the design process and you're very creative in the structures and the things that you build out, Dusten. Tell us about, how much of an important part is the actual making it A-class or beautiful or designing it architecturally speaking to be very ergonomically and aesthetically pleasing?
I just think it makes your job as a developer much easier when you do all those things right. Because you can still put in a brand new building and you can just put up a standard blueprint and it will be full of renters, but they're going to be your standard workforce housing renter, possibly, where they're not really looking to spend. They're not really renters by choice. Okay. So now we're bringing in renters by choice, or renters that want the top of the line rental in that area. Maybe they're only going to be there for a year, so they don't want to buy. They still want to rent. But all the flow, the wellness design, the smart tech, the attention to detail, when you know that, or when they know that you paid attention to detail, they can feel it almost immediately. And that person, which usually has more money, usually takes better care of the place. There's a lot of specifics in that demographic that are good. They usually have pets, so we get pet rent, all that kind of stuff. They take very good care of the place. They want an Instagrammable place. And that's the easiest way to put it. Make your apartment Instagrammable and it's going to be 100% occupied. And then you're able to push rents.
Yeah. Go ahead. Sorry, I interrupted you. Go ahead. You were saying the right thing.
No, I was done.
No, look, it's a margin play. Okay. Look, you can spend a little bit more money up front, but you need to use your brain to actually spend that money, right, in the right spots, right? And you do that and you can drive your rents up 10, 20, 30, 40%, versus you try to nickel and dime and be cheap. And yeah, you can do it. No saying you can't. And sometimes you have to, but you're not going to get the same demographic. So we're playing the margin game here, right? Like, I spend X. The spending part is not a problem, but how much do I get after I spend this much money? And if I spend a lower amount of money, how much do I get? So what we've realized is if you have the right vision and you can cater to the right demographic, your margin doesn't increase one for one. It exponentially increases, right? And all you're trying to do is increase your margin. In any business, whether it's real estate, you own any other business, all you're trying to do at every single time is to continue increasing the margin that goes to the bottom line. And that's what we're trying to do. That's why you need the vision. That's why you need the design element. That's why you need the eye. So you can't take a weekend course. You can't kind of wing it, as I said. You either have to spend the hard yards to learn it, Or you can learn it the hard way, basically, which is by losing a boatload of money.
Do you have any input or questions, Andy?
Yeah. I am curious, kind of, because I recognize that you guys have both worked in quite a few different asset classes. So, just based on kind of current trends, what we're seeing in the economy, et cetera, what is it that you guys like about development? Do you still have that same view about, maybe, I think you've kind of worked in finance, Omar, so maybe there's some businesses that bring that same opportunity, but maybe start with Omar first, and then Dustin, I'd like to hear your take on kind of where we are today as we were 3 months ago, and what kind of pivots and maybe, trend seeking that you guys need to undertake in order to kind of get to the next level.
Look, from our side, nothing's changed operationally. We're at the same spot or better. People still want to rent a place. There's hardly any housing available for, again, depending on which demographic they're in, right? Now, if you make over 100 grand or 200 grand, you require a different set of things versus somebody making 50 to 60 grand, right? So the fundamentals, lack of housing in the right submarkets, that's even worse than 3 months ago. Right? We're seeing better rent growth and rent projections in our portfolio right now. We're seeing having the ability a lot of times, even in our existing portfolio, when we tell people, hey, you want to move out and we're going to renovate this unit, a lot of people straight up tell us, hey, man, I'm just going to pay you the renovated unit rent. I don't want to move out, right? Which is, if you think about it, the best of both worlds for us, right? We get the higher rent, we didn't spend a dime on it. So for us, fundamentally, the thesis is the same. The factors that drive the thesis are the same, and our actions are still the same. Now, you might have some capital markets volatility here and there, but a lot of this, for instance, for most developers, or anybody, whether you're an acquirer or developer, doesn't matter, you built in a certain amount of that slack or cushion into your numbers anyways. So, which means basically on some projects, you might make a lot more money, on some you might make less money. But in terms of losing money, that's not really happening. But again, we can also say that because we have a really good team with a seasoned track record that has a good tenure. Now, if you just want to do developments by yourself and you're starting off and you don't know about it, or you maybe fixed your house and you think you can do a 150 unit development, that's a whole different set of skills you need to get, or partners you need to come on board. So you can still lose money, but with our particular case, we're not losing money. We're making a lot of money because the underlying factors that drive returns, they are even better now than they were 3 months ago.
Can you direct your question to Dustin once again?
Yeah, Dustin. So actually, let's take a little bit different. So what would you say are maybe some of the trends that you're seeing over the last 3 months, and how is that informing how you would run your business moving forward? Are you still looking at multifamily projects? Are you still looking at smaller developments? Would you guys maybe break this up in phases? Maybe you're just doing land development. So give us kind of an idea of how maybe your strategy, or maybe it's just the tactics, have changed in the last 3 to 6 months.
Okay. Well, I'd say I learned a lot of tactics going through some residential construction issues that I had. Like, I struggled in residential construction, building single family homes for a while. And I started realizing most of my money was made on the higher density stuff. And this, so I studied that a lot, and I've switched my whole, the whole strategy switch. We hardly have anything that's not cash flowing. So it's not like we have tons of developments that we're just starting. We started development within 9 months to 15 months. It's full, it's occupied, it's leased, it's on the next. We're starting developments behind it, but we don't have a ton of raw land sitting there. We don't have a ton of stuff that's eating cash. We have usually one project that's sitting, eating cash. Once we get that going, it's on the loan, it's financed, it's not eating our cash anymore. That thing's going to be occupied. Now we have one right behind it. So we're set up to not be like a speculation builder. And speculation people are going to get hurt at this time really bad, is what my opinion is, because I've gotten hurt during the same type of things that happen. But through it all, multifamily has never disappointed me, never let me down. It's always stayed cash flowing. So I've been able to make those assets work very well. And now when I see people dropping out of the game, that makes it even better for me. I want to go even harder now, because I know that most of the times when everyone drops out, that's when my best deals were had. In COVID, we didn't drop out. We just went even just as hard. As soon as the bank started loaning again, we were getting deals right away. So that was some of our best deals that we've ever gotten, because those deals we got paid back within like a year. Like our equity had been appreciated within 1 year. And we're seeing the same thing in development now. Like I'm going on this job site over here, and I don't know how much more that the concrete would cost to pour now than last year, but I assume probably 30% with all the labor and the rebar uppages, and now concrete's going up. So I walk by this building and I'm like, wow, we've started this 2 years ago and now it's this phase. If we waited till now to start, how much more expensive is this building? And then the fact that your buildings are so modern, so trendy, so up to the new style. And this style has radically changed. Like before that, like most stuff is the same. It's kind of wood and dark colors on your interiors. And now it's all white on white and light floors. So the way the trends have changed, it makes everything look super dated. And then when you put in the nice trendy stuff, now you're good for like 20 years before that stuff really gets dated. So this fact that you can build such nice product immediately, it's inflating right now, and no one else is putting anything out on the market to compete with, or not no one, but it's going down, right? People are getting scared. I like to run into the market at those times. So you got to figure a way to deal with the interest rate. As long as you can figure that out, keep going forward. But the initial fear scares everyone off, and I've learned that it's multifamily is fine. You can build it at any time, and you're going to be good.
I'm curious about financing and equity in the different phases. Do you guys just have one product that, funds the entire thing from the beginning until the end? Is that how you guys do it?
It depends. Like on the land, like on the developer side, yes. But the once or twice we bought the land, we had a land loan, which is going to be bought out by the development loan. But otherwise, it's just one loan, man. You just finish the entire thing. When you try to get too cute, you can get too cute. You can break it up into 5 little pieces and do this and that. But the problem is, do you want to get into the business of being a loan broker, or do you want to get into the business of being a developer? Right? So technically you can. We don't do it because our specialty is making a lot of money developing and acquiring, right? And we want our loan brokers to make money too, because man, everybody's got to make money, right? So you have to decide what lane you're swimming in. As an example, if I decide to swim in Dusten's lane and he does vice versa, our projects will never go anywhere, right? You understand? So
that would be terrible.
No, but everybody has to swim in their lane, because the other part, a lot of times don't realize is, look, this is a relationship game, right? So when you call on your vendors and you want your vendors and your partners to pick up your call and do the work for you when they're not doing work for anybody else, you got to make sure you're a good client. And how are you a good client is that you pay people on time and you don't swim in their lanes unnecessarily. You don't try to do everybody's job for them, right? People freaking hate that stuff. So pick the right partners. Like the few times I've gotten burned, it's not because of the multifamily or the project. We made a lot of money. It's because of my partners. Not because of my partners. I did the wrong thing. I picked partners where we were all swimming in the same lane, right? So it's too many cooks. It's not a partner issue. This is a me issue. Right? I'm not blaming my partners here. So as long as we have partners and specialists, they have to be really good at their job, who swim in complementary lanes, they can support each other, and your vendors can support you. Just do that. Specialization pays in this business.
Okay, so on the raising capital side, how is that versus raising for any other project, whether it's multifamily or something else? What is your experience of raising capital for development? Is it the same or different than anything else?
For us, it was roughly the same, because our investors are giving us money because of us, our track record, and our relationship with them. And yeah, does development, will some guy not give us money because of development? Sure, maybe there's like a one-off case. But most of the people are giving us money because we have a track record and we made them a lot of money, right? So when you make people a lot of money, and more importantly, when you're clearly communicating, you say, hey, I'm going to get this work done for you, say, by the 15th of the month. And every 15th of the month, like clockwork, you're getting that work done. They have all the deliverables. They have no questions. Then people want to work with you, because think about it this way. How many reliable people that do what they say and say what they do we see in our lives? I mean, you can probably count them on your hands. So when you show up as somebody who's reliable, who's specialist, who's a professional, yeah, people line up to give you money. That's not a problem.
Dusten, I know that you don't like to talk about numbers when you're capital raising. You kind of like to tell the story. Can you talk to us a little bit about that?
Yeah, you're right. I don't talk about numbers at all, because I just don't feel like the numbers are ever accurate. They're all assumptions, and no one's good at making assumptions. Some people are better than others, but for the most part, your return that's stated is not going to be accurate. Any myriad of things can happen. And the scene changes and stuff's different. So, we take a base case scenario normally and say, hey, this is kind of the base case, and there's a whole bunch of other ways that we can make money, so look it up, all the possible upside, kind of let them speak for themselves. But I like to tell people, you got to go to see what we're going to do on this deal. This deal doesn't matter. You got to go look at our deal that we've done and look at the deal, look at how well that deal performs. So I really don't sell on numbers. Because I don't really even understand those really in-depth numbers. Just like Omar said, swimming in the lane. I don't get all that number. That's just like the matrix screen coming down to me. I can see a project. I can know how many doors it has. I know roughly how expensive it's going to be. I can just see if it's going to be profitable or not, just from my experience. And then I let Omar take over and do all the numbers. And so I do tell a story. In development, you need to tell the story to sell. That's the difference. You don't have anything in front of you. You have to create a really good story that people will buy into, that they want to be a part of. You have to ask them for help. And then you just have to point to all your past successes and, where your intentions lie. I need your help. You're going to help me and I'm going to help. So it's all, like you can help me, I can help you. We both need each other. It works perfect. Then I show almost all past history and how I've broken things down. And when I've run into a problem, this is how we've solved it. Basically, everything is solvable. There's no problem that we can run into that we haven't been able to handle. We've got an amazing team. If we can't solve it, it's not solvable. So, and this stuff, it always gets built. Your vision gets built. That's what I like to tell people. Once everyone is thinking about it and your thoughts are in the universe, that thing just comes out of the ground quicker and quicker. The more people that buy in, the faster the thing happens. So I love telling the story, getting the story out there. You build buzz, people know about it more. And then when you're going to open it up for occupancy, everyone knows about it. And now you're 100% pre-leased prior to occupancy permit. Those are kind of some of the stories that I like to tell. And those are kind of the results that we get. But I actually can sell development easier than acquisitions because people know me. And I feel like capital raising comes down to, do people know you? They don't really understand the deal. They never will really understand the deal because, the numbers can change. Everything can change so quickly in these deals. They just need to trust you. And are you the person to get the job done? And once they do trust you and you've showed them results, they're going to give you the money. So for me, they like it when I'm more involved. So they think my investors think my developments are better deals than, say, an acquisition.
Okay. So I've heard you say that you do JVs, you do syndications, you invest in different markets, you do different building sizes, you different building structures, sometimes mixed use. And the reason why you like to do it is because real estate is a business where you have to evolve, pivot, adapt, and consistently change. And you like to be able to move with whatever the market is doing. Can you talk about that perspective for a second, Dusten?
Yeah. So the differences are, where's the piece of land? Is it going to take a mixed use building better? Is it going to take a mid-rise better? Or is it going to take a garden style better? And in my opinion, most of those renters are pretty much the same, except for the commercial aspect and the mixed use. But if you put a mixed use in a really poppin' area, that's all you got to do is fill the top. And even if you don't know anything about commercial, the bottom will get filled. You can get a commercial broker, they'll fill it. And normally the top, the residential will pay for the entire building. So it's not that big a deal doing a mixed use without having tenants in the bottom first. Some people want to have the commercial tenants, but that stuff takes a long time. It usually is easier to get a commercial tenant after the space is there. And I know that I can get residential tenants anytime, just from the way I build, and the way I build a buzz, or the way that we build this buzz around our product. We just make it seem like it's going to disappear really fast, because it usually does. And then, if you don't lease this pre-lease for construction, you're not going to even be able to get in. So I guess I just choose what the people want. So I try to stay in front of what people want. What do people want? Where are the trends going? What do we see in the markets? And that determines what we build. It's not what I want to build. And then I just put the design on it and try to make it cool. It's not necessarily what I want. It's what fits the area, the surroundings, everything that's already there. Can we tie into some of the buildings around it? It's more about that than my personal preference.
Talk a little bit about the kind of organization that you guys have created. So Omar first, and maybe that's Dusten's question. I'm just curious.
This is a good segue, because look, for instance, for me, I have to take care of the organization at the top. I had to figure out, for instance, who are my partners. Dusten's my partner. Another guy developer, Caleb, is my partner. Right? These are the people I have at the corporate level. We are equal partners. We're corporate level people, right? And all the other, at the high level, what kind of lending are we bringing in? What kind of equity are we bringing in? On the day-to-day level, I let Dusten and Caleb handle this, and Dusten can talk about basically how he's more, not just the subs and all of the stuff you asked, but how a lot of our subs and a lot of our vendors now are some of our bigger investors as well in our projects. So, Dusten, do you want to take that?
Yeah, we do have some really good investors that are subcontractors that are now starting to partner with us. They just see what we are doing, and they've been working since we've been working, and then they see that I'm not really doing the work anymore. Now I'm all of a sudden building this stuff, and they wonder, how is that? So I just tell them it's because I've owned a little piece of all these buildings that we've been building for however many years, and they kind of want a part of it. Picking the right subs, though, comes down to just years and years of relationships. And a super important part of picking your partner is to make sure that he's a really, really good guy and has good connections, because now he's going to have all the connections to all the same sub quality that you have. So I have really, really high quality connections. I know Omar also has really high quality connections. Caleb has really high quality connections because the kind of people they are. It's like, do I want to hang out with them? And if I don't really want to hang out with them, I don't think I want to be a partner with them on a very high level at all. And I look for people that are good people, honest. I mean, those are obvious. You need those, obviously, but to have someone that's really good under stress, and even when things are going bad, they're still respectful to everybody. Those kind of traits are extremely important, because you have to have everybody like you to develop, because people already hate you because you're a developer. Until you show them all the stuff you do, they do not like you as a developer. You can develop over on this side of town, move to a different side of town. There's over here on this side of town. They're not going to like you immediately when you come in. So you have to do all the door knocking, all that stuff, and you have to handle rejection. You have to handle all this stuff and still be cool and calm, and people have to like you. So if people don't like you, I don't want to work with you for sure, because how are you going to get a job done if people don't want to work with you? They don't like you. So the likability is my number one thing, or number two behind honesty, but honesty and transparency comes 100%. If we can't, I mean, that's just a non-starter. So, but yeah, that's what I look for in partners, and they have to be completely opposite of me. So if you took me and Omar, you can't hardly get more opposite people.
Hey, by the way,
that's why it works so well together.
Mistakes I made when selecting partners? Yeah, those are the mistakes I made. Dusten is 100% right. The mistake I made with partners, and these are my mistakes, these are not my partner's mistakes, right? Was the fact that I picked people that were too much like me. So there were too many cooks in the same kitchen swimming in the same lane, right? What I should have done, because look, naturally, we are biased towards people who think, act, and look like us. And you can't do that, because if you do that, then you have an echo chamber. So in this case, for instance, with Dusten and I and Caleb, the thing that I have learned a lot is the fact that we are complementary skill sets, and the likability and honesty part, obviously. But the complementary skill sets has really made it clear to me, and this is a learning process for me, by the way, because I'm not naturally like this, that I have to actively go and get complementary partners, not people who think like me, who act like me, and who